larger market to address. We couldn't hold on to the gains so far and below the 17,500 mark. Harendra, good afternoon. Thanks for joining us. How fragile does the sentiment of the market look to you because of all what is happening around this large corporate house, or even otherwise? Suddenly, banks-led decline is actually happening. Will we find some support on valuation somewhere down the lane? Where do you see that?
Yeah, I think it's very pertinent, Ajay, what you ask now. So I think you have to look at the price movements from two or three lenses here. Number one is, I think while we've gone into this new calendar year with a serious outperformance of the bank stocks, or you can say the outperformance of the Indian market as well, with respect to the other emerging markets now. Now, the big question this year, I think, which is a doubt in everybody's mind, is what is the level of growth that the economy is going to show for the full year? Now, that's pretty much dependent on the quality of the budget that will get announced in the next couple of days. I think there's a paramount question that's in the minds of investors because we're coming off a very favorable base, and where does the nominal GDP settle is what will play into the earnings. So that's number one. Number two is on the credit growth per se. So the credit growth, is widely debated that this year the base will not support the banks, and clearly they are also seeing issues on the deposit front. So after the big run up in the bank Nifty and some of the large names, the outperformance was already being questioned as we opened this new year, right? And obviously now the question in terms of how the credit lending is going to happen has thrown up a new challenge. So within this context, I think we will find resolution number one is that, on the budget day, when the government comes out and says that, okay, my revenue expenditure is only going to grow up by 2.5%, 3%, whereas my infrastructure spending is going to be up 20%, plus I'm bringing in many more levers to boost infrastructure demand. I think the first trigger for banks will come up from there. And that will also resolve the credit growth and credit issue. Number three, I think with respect to the overall sentiment, with respect to whatever is happening in the market, I think it finds its resolution when, in the next 2 to 3 days. So overall, I think Bank Nifty will come back to its winning ways, possibly over the next 1 week as the alignment of the government's overall top-down objectives get announced and get digested.
So are you saying you're not by any chance making a case that the overweight stance on banks have moved or have been trimmed, right? Because the earning cycle just started 4 quarters back, and it is usually kind of prolonged.
Yeah, actually, Ajay, there are one angle here is, if you see that the over ownership had actually started to worry a lot of market participants, especially some private banks. So a pair trade in terms of ICICI Bank's over ownership with respect to HDFC was already underway in the market. And actually, if you ask me, I think that leg is kind of played out now, and maybe investors will try to revisit that. Even Axis Bank, after the price correction. So in fact, I think this price correction is quite healthy at this given point of time because it gives people who missed out on the rally a second chance to probably go and participate. And
How do you?
I would like to add here as well is, the life insurance names are pretty under-owned now. So you will see the broadening of the constituents in the financial space, how people want to invest and play that trade.
Fair point. Okay, what do you make of some of the other parts of the market? Say cement, because there was also a story of price hikes and volume demand coming back, but Ultratech busted that in their commentary, saying price hikes are not getting absorbed. Do you think with this correction actually happening, that is a good space to get into if indeed government goes ahead and announces a mega boost on the capex side?
Absolutely. I think, Ajay, we put out a sell note on cement exactly a month ago on valuations. In fact, that's the largest contrarian piece in the market with respect to where the valuation stood. I think we made out two or three large points. One is valuation. Number two is that the industry will hit a glut position by 2025 and it could actually see a kind of a degrowth. And that this valuation, which prices in phenomenal long-term growth, is not going to be sustained. And fortuitously, or you can say otherwise, now the price has worked in our favor with this correction. So in fact, today morning we were discussing, that ACC has reached a 5 to 7 year valuation bottom. In fact, the debate raged whether it should be ACC, Ambuja, or Ultratech. The cement analyst stood ground and said ACC at this valuation is a very attractive level with a 2 year perspective. So I would tend to agree with you that now valuations are something that investors are looking at as given point of time, and they are evaluating as we speak on where to probably go and invest. So they are reaching attractive levels, and clearly with long-term investors will probably take a relook at this given prices.
What is your most attractive end of the market in your view, risk reward wise, under-owned and attractive risk reward and earnings?
So, on a structural, of course, the financial space, will continue to outperform. There is debate at the moment on the tech space and the reopening trade at the moment. We are not so gung-ho at the moment on that. Personally, I feel that it's a overbroked, consensus trade at the play. If you ask me, the value resides in the power space. I think there are a lot of doubters in terms of how that's going to pan out. But I think the whole space with respect to the hydrogen play, with respect to the solar play, and the power sector reforms, I think there are a lot of catalysts on that front that will play up. And one should not view it from the lens of a utility, but as in terms of a growth sector.
Sure. What are your thoughts on the small cap and mid cap end of the market? Because that has been first of all, it underperformed, and then it was badly suffered a lot of outflows and unwinding from HNI kind of investors as well. Is there other pockets of value there, or you will still steer clear?
No, actually, so if you see, Ajay, a lot of large caps trade at significant value at the moment. So clearly, the institutional money that's, you see in terms of SIP is going into the quality stocks or value stocks per se. Now, if you look at the HNI money that's come in last year, which supported the markets, and were actually quite aggressive in absorbing the FI flows, is kind of reaching a plateau. And if you see the SEBI study that got put out in terms of the kind of losses that have been made by individual investors on the FNO trade, which tells you that there is no easy money left. So my guess is that we're going to see a pause movement before fresh investor HNI money flows into mid and small cap stocks, which is the primary driver at the moment. So I would say, large caps will tend to outperform over the next 2 quarters. But that could be a good time to look at selective ideas, but it's not going to be a raging bull market in small caps, at least for the next 2 to 3 months.
Did you say 2 to 3 years or 2 to 3 weeks?
No, 2 to 3 months.
Months. Okay, great. Thanks very much, Harendra, for joining us.